Good morning, traders. How is everybody doing? I hope everybody's okay. It's Cayman here. I'm still going to be your host today for the time it needs for Ryan to recover a bit from his COVID, and let's wish him all the best. Right, let's straight away get stuck into what's happened yesterday. And first things first, there was this Biden Xi meeting um, where there were expectations, let's put it that way, for them to do something. Most of those expectations have actually sort of been met. They did reopen the higher level military communication. They did talk about the geopolitical situation, of course, with the wars, and specifically in Taiwan. Apparently, Chinese officials said, or Americans understood that China is not going to harshly also intervene against Taiwan in the next few years. But then Xi, during the meeting, said that it's none of US's business, that they shouldn't get too involved. We know what happened after, especially Nancy Pelosi's visit to Taiwan last year. But it seems both of them wanted to just keep on talking and thaw the relations a little bit because they realized they still need each other. Xi made as much clear when he had his dinner with US top company heads as well. They also agreed to boost clean energy cooperation. Xi promised to do something about the fentanyl exports, and then we had the biggest achievement is likely that they restored the panda relationship. So Chinese pandas will pop up at US zoos again pretty soon. So I hope everybody in the States is going to be completely filled with joy about that. And then, as Mark just said, until the after meeting press conference where one of the reporters asked Biden whether he would call Xi a dictator, and Biden said, like, well, yeah, actually he is. And then he explained himself saying, like, he is a dictator because he doesn't rule his country like the US is doing, basically. So I guess Biden will call a lot of people dictators in such a case. But anyway, let's move on. What happened in the markets in regards to it? Absolutely nothing. We didn't get any like really big shocks or big declarations. Of course, the frictions remain. Of course, there is an ongoing dialogue, but it's really not moving the markets much. So let's move on. Today, this APEC conference continues, and we have Japanese Prime Minister Kishida also slated to meet with Xi on the sideline of the meeting. They will have a lot to discuss, of course. There are some seafood import bans from Japan in China right now. There are, of course, those tensions around the Senkaku Islands. There are still tensions also with regards to what's happening in Taiwan between Japan and China. Also, some Japanese citizens being held prisoner in China. So it might actually be a bit of a hotter discussion and probably be a shorter one as well. But again, the expectations for anything to come out of that meeting are very, very slim. One for the diaries while we're in Japan is that Bank of Japan's Ueda is going to have his semi-annual report in front of the Diet tomorrow. So that's going to be very early tomorrow, our morning. I think it's around 9:30, 10 o'clock in Japanese time in the morning. So he might be a bit grilled and pushed around by the members of the Senate about the monetary policy, and we may see a few comments there emanate from this report and that diet session where Ueda is attending. The on the other side, and worth mentioning is that the Ministry of Finance in Japan overnight has been completely silent again, despite the dollar yen coming back quite quickly, despite yen crosses printing yet again new highs or close to fresh highs. We're still not really knowing what they are either playing at, or whether they feel trapped, or whether there is going to be a surprise at one stage. It's like a barking dog. When the dog doesn't bark, it's probably a bit more dangerous than when it does for biting. So we keep on our toes in this regard. It's been now well documented everywhere, but we've been saying it for a long time. This Japanese trade weighted index is just declining nearly every day. So I do think we still have to remain on relatively high alert, because they could intervene at any stage. Yeah, just basically be on high alert, especially if we would start to tackle those highs again in dollar yen, I guess. Elsewhere, yesterday evening as well, Fed's Daly, she still warns about against calling the end of the hike cycle too quickly. And we had this kind of comment a bit earlier this morning as well from the Bank of England's Greene, saying, and he was saying that the market is not really clocked on how long central banks will need to stay restrictive. So there is a bit of fighting back against what the market now thinks, that we have turned the corner on inflation, on the hike cycle. Rate cuts are starting to be priced in. For the Bank of England, for instance, there was this a couple of commentators saying that it could be as early as March. Again, we warn, and we think it's the pendulum is swinging a little bit hard from one side to the other again. We still want to wait and see for more data to come out to really judge whether the rate cuts are going to start earlier or later in the year, and that's going to be quite important for 2024, obviously. For the rest, while we are on the central bank, there's still going to be a lot of central bankers talking today. Most of them have already said a good dozen times what they want to say, so I don't think we are going to hear any shocks. Lagarde is about to speak, I think, in a small hour's time from now. Then we have like more ECB speakers, more Fed speakers as well. But again, I don't think we are going to hear much news or new statements from them. The hawks and the doves are more or less keeping their line now. Centennial this morning, ECB Centennial said that interest rate will eventually come down, but not desirably return to zero. I don't think anyone is expecting that the interest rates will go down to zero, not at least in the next coming years. But the global tone as well for the central bankers remains that the job market, the wage growth remains good and resilient and high. So there are still warnings coming in that they will at least keep their rates higher than what perhaps the market is trying to price in right now. So those are things that we need to keep a very close eye on, because they are obviously driving most of the markets. Yesterday as well, there was this German Constitutional Court ruling against and saying that it's unconstitutional that the German government is to move 60 billion euros from non-used pandemic funds to the climate and transformation fund. So in Germany's 2024 budget, that is going to leave an initial hole of about 60 billion euros. And we know all budgets are running a bit tight. We know how also the European Commission and the ECB are keeping an eye on government budgets. So that may create a bit of friction coming into 2024 over there. But again, since Europe is not really aligned and finding any definite agreements on fiscality in the pan-European zone, it may get brushed under the table for a while, and we don't know when they could find a resolution. But anyway, it could be that at some stage Germany gets a little finger slap, and that may weigh a little bit. I don't know on the punts or whatever. We will see when and where and if. On the headlines, I think I'm about through the headlines. For the rest, it's been extremely quiet on the headline front, especially with G being at the summit as well. There's very little coming out of China overnight. Just perhaps that on the housing prices front, we had a bit of a negative one after another negative one. And the articles are saying that the housing slump in China is not over. We know it's not over, but we also know that investors are starting to look gradually to the other side of the medal and to the other side of the economy, thinking that somewhere the worst, at least, may be sort of behind us right now. Right, let's dive into what's happened on the data front then. Yesterday afternoon, we had the PPI and we had the retail sales and we had the, where is it? The Empire State Manufacturing Index, which is usually a good front runner of activity or a show of activity for what's happening in November. This one is volatile, but it came back into positive territory after a negative print prior and an expectation for a negative print. So that's that for the November data. And then we had the October PPI data, okay? They come in a bit weaker, in line with what the CPI was showing the day before. When they hit the wires, the dollar lost just a fraction. But then when the retail sales hit, the dollar recovered most of it, and we are now hanging around levels, barring really the euro and some of the commodity currencies. We are hanging on levels a bit higher in the dollar versus the rest of the currencies. So the retail sales were expected actually to come in negative, and some expectations in the market were actually for more negative numbers than them coming out. So what it actually did is counterbalance a bit of the heavy weight on the yields right now. So what the result has been of this is just stabilization of those US yields. We are seeing, I'll have a quick look at it. We're seeing the US 10s stabilizing around 450. The twos are not recovering from what they lost really on the CPI, but just stabilizing as well. So for the time being, I think we are back into a wait and see mode for what's going to happen next. And we should not have to wait for too long, because we have another set of data coming in this afternoon. We have the initial jobless claims. We do have to keep an eye on what's happening on those continuing claims, as we already said, because they are gradually creeping up. And then we will have the next set of data for November here with the Philly Fed, and the rest of the October data with the IP and capacity utilization rate. Take them all individually. They should not be huge market movers individually, but with what we have already seen, with how this market is moving, with the willingness of the market trying to find this turnaround in the data, we have to look at it with those data again, as I've been saying already. We have to look at the whole package of what we are getting in data. And if we get a bit of a weaker set of data here, the market is very likely going to take it as a green light for, again, reinforcing its opinion, saying that, okay, US is turning the corner. So we have to look at this whole package. And if those numbers come in a little bit sluggish again or a bit weaker again, I think the market is going to jump on it, okay? If they come in a little bit better, it's going to be another stabilizing it's going to have another stabilizing effect on what we have seen of late. So I'm not going to call for a complete turnaround if the numbers are stronger, because it seems the market has now made or at least temporarily a decision that it's not looking for any more hikes, and we look at the bond market is taking everything a little bit more positive. The equity markets are taking everything more positive. So we're going to really have like much higher numbers to really force the market to get out of this view, because this view can be entrenched for a while. And as I've been saying as well, don't forget we are getting slowly into the end of the year, and we may just see some fund managers, asset managers taking this also as a green light to start doing their end of year stuff. And since there is very little real stress in the system right now, it may just be that risk continues to trade, the risk conception, the global conception of risk continues to trade relatively positive, okay? That for that. So then moving on, we had slightly better data on the machinery orders out of Japan. It's a pretty decent component of the Japanese GDP, although those are September's numbers, so they must have already been taken up in those GDP numbers that we saw the other day, which were actually not that great. On the trade balance front, we saw small better imports, but the issue here as well is still these imports, small better exports, I should say. But that may be driven because of the weakness of the yen as well. But we saw pretty deeply negative number again on the imports, which does not give us very good feeling about activity levels in Japan still, okay? So those two, we can say, negate each other a little bit. Then over to Australia, and that's a bit of our head scratcher this morning in the ForexAnalytix community, because we had a better than expected change in employment data. We had well, a very small revisions, but okay, the bulk of it was part-time. So this balance is we can argue that the balance is not ecstatic, but still it's a positive number compared to the prior negative one, okay? So this is not too bad. Yes, we had a tick up in the unemployment rate, but it goes paired with a higher participation rate, which can push this unemployment rate a little bit higher. If there's more people coming into the market, more people looking for jobs, etc., it can push up the unemployment rate a little bit. Also, the prior one was revised a 0.1% higher. So all in all, this report is not really a bad one. I would even say it's an okay report. The market seemingly got a bit spooked by this small uptick in the unemployment rate and decided to send the Aussie lower. So we've left we did leave some orders in the market, a good few of us to sell a bit of Euro Aussie or to buy Aussie Kiwi on the dips, and most of us got filled at least on parts of it. But we're scratching our head a little bit why the Aussie is not doing better than it actually does, especially if we look at risk, for instance, which is not really doing any worse anywhere. If you look at equity markets, they're pretty okay. So this is a little bit of our head scratcher today. So most of the time we know, or at least we can explain what's been going on, but this one is a bit of a question mark. It may just be that the effect is delayed, or that the market was trying to break the 61 2025 on the Aussie dollar, didn't succeed, and then there was a bit of an overload. But as to the reason why Aussie came down right on the employment report is a little bit of a question mark. So we think that it's perhaps a little bit of an overreaction or an overload of positioning, and um, gradually, we are looking for the Aussie still to do relatively well. What's next? Well, actually, not a lot next, right? Well, I mean, that's about it. This UAT auction, Spanish auctions, not really provided with any wobbles in the market at all. So let's move on. As you can see here, Lagarde is going to speak. We've got more speakers here. We got the Canadian housing starts, and we know that the market is a bit nervous about the Canadian housing market. Yesterday already, sorry, yesterday already we saw there was some kind of negatives again in the housing market in Canada coming out. So they may continue to weigh on the Canadian dollar in some form. And then this whole set of US data, of course, which I showed already. The Fed manufacturing index expected to remain in negative territory. We'll see how negative that comes out. And that's it really. For the rest of the day, it's going to be central bank yada yada, and that's it. What's happening tomorrow morning, though, for those trading sterling, tomorrow morning, early doors, we will have the UK retail sales. So that's going to conclude the major data set that we had over the week for the sterling. It's been a bit of a mixed picture, as we already saw. But this one is going to be scrutinized, I think, for the market to pick the Friday direction for the sterling. Right, let's move over to what's happening on the markets, shall we? You guys see my screen okay? Yep, thanks. So first of all, as I was saying, we did hold this trend line support on the US 10s. We are stabilizing around 450 right now, bang on. And as I said already yesterday, this 454, 455 was a bit of a resistance, and that's proven to be the case. So now we are very neutral, and we are just waiting for what the US really wants to do with their own bond market and the dollar really, since we are going to have the numbers out in a little while. So again, watch what's happening around 443, 45, 454, 455. That's for the very short term. If we get up here around the 460s, it will have to be very, very decent numbers. And as I said, the weight of those numbers, I'm not sure if they can really trigger a bigger move than up here right now. But bad numbers are probably going to reinforce the market sentiment right now, and possibly send the dollar a little bit lower. Okay, so we will see what happens there. And then before we are going to move to the currencies, I want to show something in silver here. We are in this channel, but silver is doing a lot better than gold right now. And as I've been saying already many times, silver is a metal, an industrial metal, and since risk in the industry is not really crapping the bed, since risk is doing pretty okay. Silver is typically doing better than gold. So we are at a bit of a level here. People are watching this 23, 70, 80. But I would say like to keep a very close eye on what's going to happen if we get above 24 bucks, okay? 24.05, 24 and a quarter. That is where today the real resistance or the real level of interest lies in silver. Okay, if we ever get up there, I'm probably going to take a slice more off of what I picked up around 22.30 the other day. And if we get a break on the end of the day, then maybe I'm just going to re-enter and see if we can trade that break. Okay, gold is a lot less clear. We are turning around this zone here. Tried above 1970 the other day or yesterday. Really, couldn't really do it, but we're a bit stuck here between, call it 72, 75 and 54, 55 here. There's a bit of a 20 bucks range here. We perhaps the data this afternoon, if they send dollar yields lower, they may start to trigger this move higher again. But otherwise, I could still see that there's a little bit of a risk for this gold to come off again. But for the time being, very neutral. Currencies. 108.80 is euro dollar, yeah? This trend line. That's exactly where we stopped yesterday. We are already finding support at 108.30. Give it a couple of tries. So for your intraday, this is your level to watch, 30.35 on the euro dollar. We're not doing much right here and now, but what we are seeing, although we are reversing a little bit on the euro sterling, but what we see is again these early European moves where the euro is coming in very big. So that may hint at European money managers still rebalancing probably a little bit, or this notion of the worst may be behind for the eurozone data-wise, and the market needing to rebalance a little bit of their portfolio. So this is one to keep an eye on. It's especially happening in the mornings in the European time zone, really. So euro dollar door, as I've already been saying quite a few times, not going to show these differentials every day because it takes up a little bit of time. But we are not going too far in those differentials, right? So it is a bit of a logic that euro dollar is making a dollar move, then stalling. Now we wait and see what's going to happen again for the next move. But then we see the rest of the market gravitating around it, which causes those euro crosses moves. So again, for today, I think 80.85 on the euro dollar, 30.35 nearest, then low 108s. If we're getting back down there, then there is a possibility that we are going to revisit this 107, 50, 60 break zone where we still find the top end of the cloud, okay? The top end of the daily cloud is still there, 107, 56, 7, call it 107 and a half. That's going to be a pretty decent level now if ever we get back there on the euro dollar, okay? I think we really have to watch it. Right, that for the euro dollar. Cable. Cable also rejected this zone here that I was highlighting the other day. Some decent levels above 125 towards 125 and a half. We rejected it and we are back below this prior high. And look what is lying just around that prior high. It is the top end of the daily cloud in the cable, and it's also very close to where the 200 DMA lies, which is 124.40. And we are back below. It does look a bit like a failure, although we are finding a little bit of bids again towards the end of our morning here. In the cable, we are trading well below 124 the figure. I got the impression we're trading a little bit of an 11 a.m. fixing here on sterling. Sterling crosses our bid coming into the top of the hour. So yeah, I think for as long as we are below this 124, 30, 40, it may look a little failure-ish. Also yesterday, we came very close to the 100 DMA in the cable. So if ever this would break back up above 30, 40, and we have a look back in the 25s, remember this 125, 125, 40, 50 zone is also the next pretty big zone. Failure, yes, perhaps, but I also think that there's very little reason now to get back much lower. I think the low 123s are going to show up as a decent support. That's probably going to coincide with your 107.5 in the euro dollar if it gets back down there. Max in the mid 122s, but I already think 123 will see some decent interest if we get it back in the cable. Dollar yen, in turn, there the 4-hour clouds played its role. Yesterday, we didn't even go and test. We were showing this trendline support on just below 150. We didn't even get down there. We had a couple of tries below 150 and a quarter, but reversed straight away, and we are trading back above 151. In the really, really short-term moves, we're neutral. But as I said already, psychologically, we're still at very, very lofty levels. You only have to look at where stuff like euro yen is trading. Had to go back to the weekly to find this 164.5, and also that 164.5 is the high just before the Asian crisis in 1998, and also Gav was highlighting that just before the global financial crisis kicked in, although we went up to 170 at some stage just before. It's one of the highs also before. We are at really lofty levels in those yen pairs. You only have to look at what's happening here in the Aussie yen. We have broken above the trend line here as well, and yeah, we have been retesting it, but we are moving again very close. We are trading actually very close to the September high, September 22 high here. As you can see, just globally, yen crosses are really at lofty levels. This was this long-term Kiwi yen line, and we are above. Kiwi yen is trading 90.60. So you can see we are really trading at recent years, very, very high levels in the yen pairs, which make me still a bit nervous about what the MOF may be thinking. Okay, looking at a few other pairs, dollar Canada, I really have not a lot to say. The support comes in at around. We have a quick look for those really watching it. 136 and a quarter, 136 and a half. If it gets down there, then keep an eye on it. But the one that I was talking about, we were looking at this euro Aussie in the room. There is decent support anywhere between 167.60 and 167.75. For those having a bit deeper pockets, 168.20, 168.45 double top. And we are like scratching our head a little bit as to why we had this recovery post the Aussie labor report. So a few of us are attempting to counter trade this a little bit here and see if we can get back down to mildly lower levels around 166. The figure would already be some kind of achievement where we stand right now. Another one is Aussie Kiwi. That one really held well around this 50% retracement of the move higher, and that to me is constructive. We also broke back above. This has been crossed a little bit too often for my liking, but still, we've crossed above this line here again around 108.20, 25. We're trading just around there right now. I'd still say it looks a bit constructive for a return, possibly up to mid to high 108s for a starter. The 108.85 will likely show up again. Not sure if we can get back up there, but it does look constructive still, this one. What else do you guys wanna have a look at? We have to talk about the Norwegian kroner, because the Norwegian kroner really took back a lot here all of a sudden. I think with risk flying, the Norwegian kroner is also a risk currency. Okay, the Scandis are a risk currency. Sweden, perhaps even more volatile, or even more than Norwegian kroner, because there's other stuff in there as well. But we had like this big setback in Euro Noki for one, where we are coming into support here, 1170. But then the big one is dollar Norway, right? Dollar Norway really gave it up. Uh, we were looking at this level here. I didn't trade it, but then as soon as it broke below 1108, we started to accelerate pretty fiercely on the US CPI, when equity markets were rallying, when the dollar was giving it up. Risk was doing and still is actually doing very well. And we really collapsed actually. Dollar Norway lost 4.5% from its highs, which is a pretty big move. Gav is saying you're looking at 1080-ish as being a big level. Yeah, I've got it. I've got it around 1077-ish, 78. That's 61.8 here, but perhaps it's probably, if you take this move here, yeah, it's all happening there rather, right? Get rid of this one. It's there, 76, 76, 77, 78. That's it for me. And it's been a bottom there as well. All right, Gav. It's been a bottom there as well. It's been, yeah, I know your 1080s are trading around here. But if you look at this is also 1075. This is also 1076, 1076 here as well. I think this is a pretty decent zone here on the dollar Norway to monitor where we are. All right. That for that. And then we have sterling Kiwi. Giuseppe, you're an exotic man, my friend. You're a very exotic man. Just a quick one on those notes, because I've got it up here, and then I'll put your sterling Kiwi on. So we've broken above the channel, and we came back to it. That was your retest of the 55, 56 zone on the US 10s, right? This is a 10-year note futures, and we bounced off it. So okay, this is going to be quite interesting. Around 108.03-ish, if we get back into the channel, the bond market may get a little bit nervous. If we continue to hold this, we may actually push up a little bit. Why not get back up to this trend line here, which had been traded, retested, failed, and then last way lower. It could get back into the 109s. Okay, sterling Kiwi. I don't even know if I've got any lines or what. Yeah, you see, it's pretty empty. You are short. Okay. Well, I would understand why, from a fundamental point of view, I would understand in a way why sterling is still behaving a little bit weak-ish. From the Kiwi side, I'm a little bit more in doubt. Okay, so I'm not going to give you my view, because I don't have one, but I am okay to show you what I think. Well, let's just take this one. This is actually the big decline. Let's take this one. You're short from 280. 208.48. Where is that? Well, perhaps I don't see anything there, but okay. Well, for as long as you're under 209, well, that's a bit wide, because it's very volatile, sterling Kiwi, very volatile. 209.35, 210.30, but let's say this here it could be seen as a triple top, 209.65. For as long as you're below there, you have a chance to that is a pretty decent position for 205s perhaps, if you're lucky. Revisit back to here, 203.80, 203 the figure, possible. Possible. Yeah, that's about what I have to see on that. Yeah, that's the one. But before I let you guys go today, we need to keep an eye on what's happening on the S&P. Okay, we rallied over this 4,500. We're trading around. I think this is not saying it's big decision time. I would rather call it 45.35. 45.40, and the big decision time already happened here, at least for the for breaks. Okay, this was the break. We actually barely seen those levels pop up at all. It could be, and that's why what I like to say, when you got those data out in well, in this case in the US, because the S&P. Good data are not necessarily bad for equity markets, and also we have to look at the calendar there. We are in November. It is traditionally an okay month for the assets such as equity markets, and as I said, we are getting very close to end of year as well. Could be a bit of window dressing, could be a bit of a Santa rally, could be a bit of this and that. But we will have to see if it really holds, if yields start to really go higher again, because we will still have bond issuances next week. I think they start again. If yields go higher, it may weigh a little bit. But looking at how this market trades, looking at what we knew from those hedge funds being underweight in equities, I wouldn't exclude that this is at least holding. Okay, so I would say that if you get back into these mid 44s, it might already be that we find support here, and especially in this zone now, it's probably going to be bigger support anywhere between 44 and 44.15. Keep an eye on what's happening at 45.35. Okay, if we start to get above there, then I guess FOMO will again kick in, and we may even push higher. Looking at the time, just one thing that I wanted to show, right, is no, not the right one. Is the Aussie dollar, right? We went above yesterday. We tried above in the morning, and then we failed 65.25. Just continue to keep it in mind. 65.25 on the Aussie dollar. It's going to be even important for the close of the week tomorrow, I guess. I think this is really a quite important level. On the downside, we had a quick look after after that labor report. We had a quick look below, but we are kind of now holding around 70, 77, 78 on the Aussie. So that's your initial little range to watch. I don't know. I'm not too interested in Aussie dollar position right now, but just keep that 65.25 in mind. Okay, we start to get back above, then and hold. It could be that we are on our way to 66.5 or high 66s. Okay, and that is it for now. Trade safely. Not sure if we're going to get like big moves today. Always be on your guard for what's happening in the yen. If we would push up again to 152, or if those yen crosses continue to push up again. And that's it for me. We will talk to each other tomorrow. Thanks very much for coming to the Flow Show, like every day. Have a good day.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.